Everything is so expensive these days. Medical bills, car payments, mortgage rates. So how do you actually protect your retirement savings and make sure that you don't outlive your money? Hi, I'm Hannah Skinner with the Senior Savings Network, and today I'm excited to be joined by someone who brings over 26 years of experience in the financial services industry. Throughout his career, he's built a strong reputation, not just for his expertise, but for his genuine passion for helping seniors navigate important financial decisions with confidence. I'm looking forward to diving into his insights and learning from his years of experience. Please enjoy this interview with Todd Stevenson. Thank you so much for meeting with me today, Todd. It was a pleasure having you.
Yeah, no, thanks for the opportunity. It's hard not to be excited about what we do. Right now, we're at a time where the baby boomer generation that ran from 1964, is that right? No, 1946, excuse me, to 1964. This year we're serving boomers that were born in 1961. There's still almost 10,000 people every single day that are turning 65. And while more and more people are working beyond 65, and whether that's to line up with the full retirement age of Social Security, which today is 67, or people are having to work because they're concerned financially, we just love the opportunity to talk about what we do, share with others what we do, and know that there's a way of protecting everything you've accumulated for retirement while still giving you an upside. One of the things I love asking people is, out of all the money you've accumulated for retirement, what percentage do you feel comfortable losing? And that's maybe a question you might want to ask yourself.
Todd, when talking about solutions to outliving your health, your wealth, and becoming a burden on your loved ones, how are those solutions different from Medicare supplements?
So when we talk about Medicare and we talk about outliving your health, one of the things I've learned through the years is that health does not discriminate. And I think there's things that we can do to impact our health, whether it's lifestyle with diet, it's exercise. At the same time, though, I've had too many clients that have run into health issues that they never would have expected. And whether that's ending their life early or making their life not quite exactly as they thought retirement would be, candidly, we really just don't know how that's going to impact us, which is why it's a concern of most of our clientele. When it comes to outliving your wealth, that's really quite a different story. And that comes down to what type of planning you do. Most of our clients come to us with a financial advisor. And not to take anything away from them, I think financial advisors are phenomenal at helping people accumulate wealth. However, when we get to retirement, it's not always about accumulation. A lot of times it's more focusing on decumulation. And we have a host of tools and products available to us. It's not a one-size-fits-all, but we do have solutions to help people when it comes to outliving their wealth, and something we really, really enjoy talking to our clients about. And of course, the last one is being a burden to the family. Many of you that are going to see this video are going to have prior experience. It's going to be with a parent, a grandparent, maybe even a child, God forbid. But the reality is that 70% of us are going to have a need for long-term care at some point in our lives. Whether that's at-home care, whether it's facility-based care, assisted living, maybe even memory care, the reality is that 70% of us are going to have a need for long-term care. Interestingly, only 7% of our population is insured for long-term care. We absolutely want to have this discussion with you. Sometimes people who even think they're not going to qualify actually can qualify with some of our products or all of our products. But at the end of the day, while we can't help you with the health, which we have on the Medicare side, and hopefully you've got the best product for you that will allow you to go to whatever providers you want to, get the level of care that you deserve and desire. While we can't control everything beyond Medicare, we certainly have some tools we'd love to discuss with you in regards to your wealth and being a burden to your children.
So why would I take my money out of the stock market to put it in one of the products that you're talking about?
That's a great question, and I'm not sure that I would tell you to. It really depends on the situation. Right now, it's end of April 2026. Yesterday, our market finished around 49,500 points. We're within less than 1% of a historical high. I like to equate the market to a poker table. And for a lot of people right now, their stack of chips are higher than they've ever been. And what do they say? What's the best time to leave the casino? Is that when your stack of chips are the highest. Of course, the whole buy low, sell high also mentality fits that. So why would you take money out of the market? I'm not saying that's the right move, but it might be, and depending upon your situation, we might make that recommendation, or you might come to the conclusion yourself that maybe right now is a great time to take some chips off the table, if you will.
If I have a Plan G Medicare supplement, why would I need to be thinking about long-term care? Doesn't it cover that?
Yeah, it's one of the things that I think is one of the biggest misnomers in Medicare. So many people come to our Medicare agents and they're quite surprised when they find out that long-term care is not covered by Medicare. Medicare's rule of thumb is it medically necessary? But long-term care is one of those excluded items. And the reality is so many people haven't even looked at long-term care. And it's something that really, as our communities continue to age, one of the things that we're really seeing more and more of, and likely you're seeing it, you're reading about it, but the reality is so many people are having to spend down their assets because they didn't do the proper planning. They didn't look at trust. They didn't look at long-term care, but they find themselves in a situation that they have a need for a level of care, and they don't want to put that burden on their children, or they don't have children, or the children aren't able to provide care for them because maybe they're raising loved ones, they've got to work to pay their bills, whatever it might be. But the reality is that Medicare doesn't provide long-term care coverage. There is a long-term care plan, not plan, but system available for those that need it, and it's called Medicaid. And the reality is we're going to see more and more and more news about Medicaid. It's an underfunded program. As of recent, the federal government has changed its funding, so really it's relying on the states. But at the end of the day, we have the tools to help with this. Whether you can't afford it, whether you can't qualify, whatever it might be, do a checkup with us. Let us have a conversation with you to talk about long-term care, because you might find that it's a product that you not only have a need for, but that you want to make sure that you don't become a burden to your children, or that you're not putting that burden of care on others.
Why can't I just leave money in my IRA or 401k to use for later on?
You absolutely can. That is a way of doing it. And some people find themselves in a situation that they don't have another choice other than to spend down that 401k. What a lot of people don't know about long-term care is that the traditional long-term care policy, where you pay a monthly premium and you get an X amount of benefit, number one, that's not a guaranteed premium. A lot of people find themselves within a few years of getting a premium increase on those policies, which when that happens, the company will say, okay, option A is you can keep the premium the same and we'll lower the benefit so that you can continue to afford that policy, or we're going to increase the premium to keep the benefit level the same. That's what we call traditional long-term care. A lot of people don't realize we have hybrid products. That's a life insurance policy, which means it's guaranteed to pay out, but it's a life insurance policy with a long-term care rider. Not only is it typically an easier policy to qualify for, but the reality is for a lot of people, they find out that they're buying coverage from pennies on the dollar. You might put in X number of dollars that you're going to get out. Maybe sometimes it's a little bit more or it's a little bit less. That's all depending upon your age. But a lot of people find out they're able to buy a policy for pennies on the dollar. If they don't use it, there's a dollar amount that goes back to their estate or goes to their beneficiaries. All I can say is take 15, 20 minutes, have a conversation with us. Let's find out if it's the right product for you. But to your question, you don't have to buy a policy. If you've got money in a 401k, you can absolutely spend those assets down. The problem is that can leave others in a situation where now they've outlived or they're about to outlive their wealth, and that really creates a whole different dynamic.
The last 5 years of my life, I've made the most money that I've ever made. Once I retire, how are things going to start looking different for me?
That's a great question. And one of the things that I find with a lot of clients is that they haven't quite created a budget in retirement. And when you're coming off your high income years, you're used to having disposable income that allows you and affords you to do a lot of things that maybe you won't be able to do, or maybe you can. But one of the things I highly recommend is creating a budget. Without a budget, you're wondering, where did my money go? With a budget, you know where your money is going to be spent. So one of the things I first recommend is doing a budget for yourself. Of course, the other thing that we recommend is doing a wealth checkup with us. We may have some products that are better going to suit you at more of a conservative position. Too many of our clients think that, right now it's April 2026. We're near a historical high in the market. So many people think that's going to continue. The reality is that we're in a 17-year bull run. The last low in the market was March of 2009. Back then, the market was at 6,507 points. Today, our market's at 49,500, or it's hovering right below 50,000. When that falls, your investments are likely to fall as well. You may have some conservative positions, you may have some more aggressive positions, but none of those are shielded from downturns in the market. So the reality is now is a great time. If you're retiring, now's a great time to do a financial checkup with us. Financial advisors, which most of our clients have, most of them are still focused at assets under management. Most of them are focused at having your money in the market. While that's not true of everybody, our focus is ultra conservative, and we'd love an opportunity to share that with you and show you what that might look like. Whether it's the right fit for you, that's up for you to determine, but give us a call, let us sit down and visit with you and have this conversation to make sure that you're aware of what your options are. Our job is not to tell you what to do. Our job is to give you an opportunity to buy our products and become aware of those products. So really what we do is take an educational position, a consultative role, to help you make an educated buying decision.
If I make an appointment with you, what's the difference between the Senior Savings Network and my current financial advisor?
Well, one of the things that a lot of people don't know is that we have a partner company that's owned by our same parent company that is an investment advisory firm. We partner with securities advisors or financial advisors, if you will, that are our own in-house advisors. What's different, though, is that we're on the insurance side. We're on the ultra-conservative side of the investment world. As insurance advisors, we're not talking about stocks, bonds, mutual funds. Those aren't products that we are selling, although, like I said, we have partners that can offer it for you. We're going to be on the ultra-conservative side of the spectrum, giving you the ability to 100% protect what you've accumulated for retirement, while still giving you an upside. And most of our strategies are uncapped upsides. The last 10 years has been unbelievable in the market, but we have a lot of products that have performed at better than 7.5% average return per year over the last 10 years.
Todd, if you had one thing to say to our clients today, what would that be?
If I had one thing to say to our clients, people don't care how much you know until they know how much you care. When we sit down with a client, when we visit with a client about their financial situation, their health, concerns of being a burden to their kids, we're looking at it from an angle of care. We're looking at it from an angle of we all have parents, and unfortunately some have passed, but when we give advice, we try to give advice to you as if you were our mother and our father, because the reality is if we're giving you that level of advice, we're always going to be doing what's in your best interest, and 100% of the time that's our focus. It's always educational based, wanting to give you an opportunity to better understand what we can do. So many people have misunderstandings, misinterpretations of what it is that we do, but we play a huge role. One of the things that people don't realize is that there's only 3 types of contractual income. There's Social Security, there's pensions, which so many people don't have any longer, or there's an annuity. An annuity can provide you with a lifetime of income that you nor your spouse can outlive. At the end of the day, we have several products, several companies that we represent. And of course, one of the values of being a broker is we're loyal to our customers. We're not loyal to an insurance company. So at the end of the day, my recommendation is give us a call, sit down with us, let's have a conversation, let us share with you what it is that we do, how we do it, and whether it's the right fit for you, that's up for you to determine, but at least have a good understanding of what it is that we can offer you.